Hello and welcome to a Budget 2009 pensions update from Informed Choice. My name is Martin Bamford and I'm a Chartered Financial Planner at Informed Choice. We have created this short video presentation to explain the key measures related to pension planning announced in the budget earlier this week. Within this presentation, we will look at the proposed changes to income tax relief on pension contributions, the interim measures being introduced to prevent abuse of the time between now and the introduction of the new tax relief rules, and the planning opportunities we believe are still available to high earners saving for their retirement. Before the budget, we feared that the Chancellor would remove higher rate income tax relief at 40% for pension contributions. What transpired on Wednesday afternoon was not a complete removal of the incentive to make provision for retirement, but a more focused attack on higher earners, who, he claims, receive a disproportionate benefit from the current pension tax relief system. The higher rate of income tax relief on pension contributions is being reduced from 40% down to 20% for people earning over £150,000 a year. In practice, the tax relief rate will be tapered down to 20% for people earning over £180,000 a year. Therefore, people earning between £150,000 and £180,000 a year will receive a variable level of higher rate tax relief on their pension contributions in the future. These new measures do not come into force immediately, but are being introduced from the 6th of April 2011. To prevent higher earners from taking advantage of the window between now and April 2011, the Chancellor also introduced some interim special measures which came into force on Budget Day on 22nd of April. These interim measures will prevent people from making large additional pension contributions between now and the removal of the higher rate tax relief in April 2011. The interim measures will only apply to people with income of more than £150,000 in either the current tax year or either of the two previous tax years, so the tax years 2007-08, 08-09 and the current tax year 09-10. They will work through the introduction of a special annual allowance of £20,000. If this special annual allowance applies to you, you will continue to receive full higher rate tax relief on contributions up to £20,000 a year. However, for contributions over this level, a special annual allowance tax charge of 20% will apply on additional contributions made. This will be enforced through the self-assessment process and will effectively reduce the tax relief on those additional contributions from 40% back down to the basic rate of 20%. The interim measures will only apply if you change your normal pattern of pension contributions between now and April 2011. The earnings figure of £150,000 is your relevant income, which can include deductions for any pension contributions up to a maximum of £20,000, and also any other allowable deductions such as gift aid. However, any salary sacrifice in return for pension contributions established on or after the 22nd of April must be added back in. In terms of planning opportunities, it is important not to assume that you are caught out by these interim measures and stop making pension contributions now as a result. For the interim measures to apply, you have to meet several conditions. It's also important not to change the normal pattern of your pension contributions or increase your contributions above £20,000 without first seeking professional independent advice. When income tax changes are introduced on the 6th of April 2010, depending on your level of earnings, you may benefit from using pension contributions to reduce your net adjusted income to preserve your personal allowance. This is because the value of pension contributions will be deducted from your earnings to decide whether your personal allowance should be reduced for people earning over £100,000 a year. We hope you found this short video presentation from Informed Choice useful. Informed Choice is authorised and regulated by the Financial Services Authority. If you need advice or would like to discuss your pension planning situation in more detail, please do get in touch. You can visit our website at www.informedchoice.ltd.uk, email us at hello@icl-ifa.co.uk, or call us on 01483 274566. We look forward to hearing from you.